Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 11:30, markets have recovered the lows that we saw in the morning, virtually trading flat to negative and positive. To give you certain levels on the Sensex, Nifty Bank, Rupee Dollar, and crude oil, well, the Sensex is down about 20 odd points. 66,270 is the level on Sensex. Nifty is up 10 points. 19,760 is the level on Nifty. Nifty Bank trading with 25 points uptick. 44,315 is the level on Nifty Bank. And on the Rupee Dollar equation, well, 83.26 is the level for Rupee against the dollar. Little bit of kind of weakness, marginal weakness, if you will. And on the energy basket, well, the Brent 90.60. This is after seeing $91 on Friday. There is slight bit of downward move on the crude oil front. $90.60 to a barrel is Brent, and $87.50 a barrel is NYMEX. It is the 10th day of post the Hamas attack on Israel and counter attack by Israel on Hamas. There are news flows that other neighboring countries, also there is disturbing news from Syria, from Iran, possibility of escalation, and that may lead to crude oil prices moving up is absolutely not deniable. It is possible that if the situation escalates and goes into the neighboring countries like Syria, especially Iran, and as we all know, friends, Iran is the second and the fourth largest producer of crude oil and natural gas. Very strategic in terms of supply side logistics as far as Iran is concerned, and any disturbances over there will send the crude oil prices to an elevated level. Remains to be seen, and unfortunately the fact of the matter is, friends, that we cannot have any kind of assumption in a situation like this. Every day, every hour, things evolve as the news flows come to us and the markets react. We may see volatile markets globally, not only in India, depending upon what the news flow is as far as the situation in Middle East, especially with Israel and Hamas is concerned, and whether there is going to be any kind of escalation across other countries like Syria, especially Iran. And then it remains to be seen who else gets involved. So the situation is fragile. Escalation of any kind will lead to more complexities. There are already reports that global economy can slow down, energy prices will shoot up, inflation might have its own kind of an impact depending upon which geographies we are talking about. So difficult times, but we have to live with it. On the domestic market front, well, like I mentioned, we have recovered from the initial lows, and even last week, if you go to see, there was a recovery from the lows. So it's good to see this recovery coming through. And as far as the earning is concerned, well, we've seen three large names in the IT deliver numbers. TCS followed by Infosys and HCL Tech. We'll have Wipro amongst the private sector banks. We'll have HDFC Bank announcing its numbers later on, and then we'll react to it. So overall, whatever we've seen, very few numbers that we've seen, but it was good to see that there was no huge negative number or negative comment as far as the IT universe is concerned. And improvement in situation is something what the management has spoken about. Rationalization of human resources is also something that the management has spoken about, that they will focus on. And margins may improve depending upon the ticket size of big deals. So the expectation of the market was that possibly you will have disturbing numbers on the negative side from the IT pack, but whatever we've seen of these three companies, there is no such huge negative. So that's a positive. Banking and NBFCs, that is financials, will do well is what our estimate is. And along with banking and financials, I think autos should deliver a better set of numbers. And possibly you'll have some positivity as far as cement is concerned. Just to give you an overview in terms of what sectors are likely to do better in terms of earning visibility. Second quarter advances and deposit number, CASA ratio that was given out by various banks and fundraising program by NBFCs has given a tailwind positive in terms of credit demand being intact and even growing as we go forward from here on. So if the second quarter numbers, whatever remains to be seen, if they don't kind of give you a negative surprise, then possibly sector specific and stock specific you will see moves coming through. Overall, we believe that this 19,350 that we saw possibly on 4th of October is where the base could be. The reaction as far as whatever we know up till now in Middle East is done and dusted. In case if there is any adverse news flow, then the markets are going to react. Not only our markets across the globe are going to react accordingly. And you may find a little bit of bottom over there. But before this situation in Middle East, we've seen US attacking Iraq. We've seen issues with Libya. We've seen issues with other countries in the Middle East and the geopolitical situation over there, and markets have survived that. And even the pandemic that we saw very recently, market has overcome that. So what I'm trying to say, friends, is that whenever you get corrections on news flows, those corrections are great opportunity to build up a very strong portfolio over a longer period of time. This war, God knows, this situation, God knows what kind of development may happen. We may have to live with this for at least immediate short to medium term, but possibly wisdom should prevail and diplomatic dialogues can possibly have a reasonable amount of resolution to the current situation that we are watching as far as Israel and Hamas is concerned. So coming down to the stock specific ideas, well, there are two of them. One is from the auto pack and other one is from the chemicals stroke specialty agrochemicals industry. The first one is Mahindra & Mahindra M&M Limited. Decent set of numbers, whatever we've seen, new launches that they have lined up or already been introduced. There's tremendous amount of traction. Waiting period is growing longer depending upon which segment and what model you want to buy. And of course, sales from tractor and agri equipment is also something that has kept on the positive side. JV to introduce EVs, further EVs is something augur well as far as market share and business is concerned for Mahindra & Mahindra. So at current levels, we believe that the stock is poised well in terms of valuation, and it could be one of the stocks that can possibly be in the limelight on earning visibility. So M&M, Mahindra & Mahindra is the first one. Second one is a company called PI Industries. We have been positive on this particular company for a very long period of time, but consistently quarter over quarter and the commentary from the management is very, very strong, and that is visible in the numbers. As far as business strategy goes, R&D investment goes, or launching of new products is concerned, there has been tremendous amount of traction with PI Industries. And China plus one, Europe plus one policy will also augur well as far as Indian specialty and agrochemicals companies are concerned. It may take time for the volume growth and exports to grow, but it is a big, big opportunity for that particular sector, that is chemicals, specialty and agrochemicals. So PI Industries is the second stock from a long-term point of view. Mind you, friends, these are fundamentally long-term recommendations, so you need to have at least 12, 18 months plus kind of time horizon. And as always, don't try to rush into buying the stock. Start in a staggered manner. Deploy 25-30% at current levels, and because of the uncertainty in the market, and if you get a correction, you will have the opportunity to add to the stock at lower level. But fundamentally, long-term investment ideas, so you need to have long-term time horizon if you decide to invest in these two companies. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of your health. Bye bye.